reverse trading. What is it? What does it do? And how to use it. So you need to understand that everything that I teach you guys is basically just also an additional tool in your toolbox. You don't have to use everything I teach you. It's just that the deal was that I show you everything I do or I did to be where I am today. And I think that the reverse technique is very useful, especially for people that are trying to take counter trades or reversal trades. Okay. I don't use it practical anymore, but I still use it in my head almost every day. And it actually helps you stay away from a lot of traps. Okay. This with the trade away technique is one of the best tools, like the best combo you can have. Okay. So let's give you an example of what is reverse trading. I'll do a little graph because I know I've received some messages. People love them graphs. Okay. So basically, the reverse technique is, let's say you have your Asia box. Okay. Let's put it blue. No, that's the text. Sorry. Blue. All right. So let's say you have your PA and you have your PA. Let's say the PA does this, and this, then this, like this. Okay. And then does this and starts leaving. Let's say that you have your inducement low. Let's say that there's even a relevant structural point that was made of whatever, right? Whatever. You understand the drill. Okay. Let's remove this. People are going to start to look at this as a label. So let's say that we have like previous day equal lows equity. The concept of reverse trading is, let's say the price started leaving without you. You missed the trade. You're like, goddamn, I would have loved to enter here, right? As an entry, and like enter here, let's say, to target whatever target. The reverse trading technique actually is there to simulate the trade that you would have taken. Okay. So imagine that you would have taken this trade and you would have taken the TP to Asia high. You are not allowed to enter any types of counter trends. Let's say like there's a mitigation of this, enter this, or inducement of this, enter this, until your fictional TP is hit. Okay. I repeat, you are not allowed to enter any trades until your fictional TP is hit. How to do so is simple. You put in an alert, right? You put in an alert here, like this, and you put an alert and you wait until it's hit. If any buy trades, and this is when you've done your due diligence, like you've seen that this Asia high is like highly confirmed, there's a lot of liquidity, previous daily high also, whatever, you've done your due diligence, you can enter buys, but you're not allowed to enter shorts. Okay, I'm telling you, do not underestimate this technique. Let's go into the graph, the chart, and let's find an example. Let's say you are in GU, okay? Price does whatever it has to do, right? Let me just check if there's anything here. Okay, so price induces low, comes down into that structural higher time frame POI. So we have our imbalance fill. There's here our relevant break of structure, right? We're trading away from this point. Now this becomes the last relevant inducement. So we most likely trade away from this point, let's say that you missed this trade. This is completely ugly. Like, yeah, let's be honest. This is completely shit, right? Well, let's say that you missed this trade, okay, to enter here. Where would be your target if you would be involved into this trade? Let's say that you decide to put this structural point. You are not allowed to take any trades until this structural point is hit. Because look at what happens if you don't do the reverse trading technique. You will see an inducement of this. You will think that there's a relevant liquidity here, even though we're trading away from this inducement and this mitigation here. You will try to short from here, and you will potentially enter the short. Like, I don't mind if you want to enter the short. You will not close this to break even, and you will be destroyed. Okay? Then you will hit the stop loss, or even you would enter this trade here, even worse, and be with your entry taking a coffee at your entry point for 1 hour and 45 minutes. Okay? So, very important, that the reverse trading technique is a fictional TP. So, you enter here, right? So, that's how I call it, RT. Okay? RTP. A reverse trade and reverse take profit. So this is something that I do even as of today, because most of the time I miss a trade because of London session. And what I do is I actually position myself to not look at that chart until a relevant structural point is hit. And it doesn't mean that a lot of people also confuse what TPs are. So example, you enter a trade. Let's say there's an inducement, whatever. Okay, blah 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 blah. Okay. So let's say that you enter here, right? Your TP can be the equal highs, but also the next enticement zone. It doesn't have to be a structural point. It can be only the next enticement zone where people will be entering, right? Very important. The take profits, we will go in deep dive and we will go deeper on them in another video. But what I'm trying to explain is, since we're soon going to the entries, I need you to be diligent about where you enter. Because I really started seeing people taking pullback trades like this and like entering this trade, right? And targeting this, right? People doing this, like this is like a 1 to 2,000. Understanding intraday play and intraday liquidity with probable targets. When you're positioning yourself with a reverse trade, you are actually understanding where is the next liquidity zone or where is the next entry zone. In that case, let's say that you would be targeting this if you would be in this trade. It's just to make you an idea that traders always hold on losses longer than they hold on wins. This is easier. You're not really in this trade, right? So example, if you were in this trade with this reverse technique, you would, of course, let's be honest, target the moon, right? So until this point is taken with an alert, you are not allowed to take any shorts until the TP is hit. And to identify a reverse trade is usually when the trade is away already against you, like it's already gone. You've missed it, okay? This is very important. only use the reverse trading on confirmed trades. So let's say you see this, right? You have your inducement low, right? You have your mitigation of Asia midline, right? Perfectly filling this imbalance. Trading in line with the liquidity, trading away from this inducement. Now we have a new inducement. We're still trading away. Intentions wise, we're still targeting this, right? If you were in this buy, let's say let's go here, let's go on M1 to see if we can find a ninja one, right? Let's say perfect like this, like that's my type. If I was in this trade, where would be my overall TP and my overall most probable TP? So my most probable TP would be here, of course. But if we are in the setup trading away from this inducement, you would want to target the fence. You're not allowed to take shorts until this shit is taken, because look, there's that liquidity here. There's a equal lows faking. A lot of people would see this as an inducement because they would do this, even though I already explained 2 million times that the invalidation shield doesn't have liquidity. So that's another proof. You can see it here on paper here clearly. This invalidation shield doesn't have liquidity. So stop trying to mark up liquidity at this space, at this spot. The only structural point that would make sense is it's maybe this one, but even this one, they would have to enter on the invalidation shield. So all this is crap, okay? So you understand why there's a pullback, right? Equal highs, coming back, break and retest trader, right? You can trade in line with the liquidity, right? You see if there's an entry for you on the break and retest, no entry for you, fine, you wait. There's structure being made, right? Blah, 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 blah. This is an internal structure, but there's structural legs. This is an entire structural leg. There's a pullback, right? What are we reacting from? You look to the left, this POI here, okay? You can see the reaction, but it's also not in your reverse trade DP. Remember, when you're in a trade, you're always targeting defense. This is a trick. Use this bad habit in your favor, right? Coming out of Asia, we're buying. Then we react to this POI. Come back. Does this POI has liquidity? Yes, it has liquidity, right? Will it reverse from there because of this? No, remember, we have that whole structural leg, right? So this point here has even more liquidity. So your target should be here. Listen, it's very, very simple. Stop thinking that these random points will reverse on your face, right? And this is even better. We have a reaction of that now. Confirm S&T based on intentions only. Price comes back, mitigates our POI. Is it even taking with this POI with the imbalance? Let's check. Please. Come on, look. Can I even zoom in? Even look at this shit. Look how precise this thing is. Oh yeah, man, Joe, how are you able to enter in such? God damn it, I'm not pulling this from my ass. We identified the tradeaways. We identified the liquidity, the most relevant liquidity of previous daily high. A reverse trading technique helps us identifying this high being relevant, even though if we just decide to target the POI, this becomes an SMT based on these intentions, right? We understand that we're trading with the liquidity. Take a fucking buy here, right? And target the same thing. These are my favorite ones. Faking the SMT, also potentially faking the equal highs, right? Equal highs, all the same crap, all the same thing. We're experts now. Faking, coming back, and you have an entry, and now you can get involved into this one. And listen, this is a 4 pip stop loss. If you miss it, it doesn't matter. You go back on M1, right? You check if there's something here. Like that would be my style, but you always cover the low. UTP. Where's the... Here we go. It's a 1 to 4, almost 1 to 5, right? It's perfect. This tool and this technique is very simple, so I'm not going to spend an hour talking about it. But what I can tell you, it has saved me so many stop losses. You have no idea, right? Because in a lot of the cases, we see the entries after they happen, okay? So it happens a lot. So you can see that here you have an inducement, previous daily high taken. You go in M1. Let's go and do a little bar replay. You go in M1 here. You see this, like, it retested that POI perfectly. And now you just realize that you've missed this opportunity, right? You missed this. And the price is already here, right? Stop what you're doing. Confirm the reverse trade. If I was in this trade, where would be my RTP? My RTP would be most likely here, right? So you can just put the RTP here. You put an alert. You type RTP and you wait. Now, if price decides to give you another opportunity, like it did here, right? Comes back, break and retest these guys, pulling higher, going into that POI. Did we miss? We missed. It's okay. But this is still an enticement to enter. So this becomes an inducement zone. So this becomes here a relevant break of structure, right? Because we created an enticement high. It's not really a structural shift because we haven't made a new structural low here. So the structural hasn't really switched. And then you can enter in this zone and target the same thing. All those POIs are fat, but they provide entries. Until this point is taken, so you do this like this. You double click here, oops, remove that crap. You double click here, EU, RTP, save. Receive the notification on your iPhone, right? Fine, okay. What happened? Oof, you induce low, right? Price induced low. Continues, right? Okay, creates those equal lows, reacts, induces low again, creates a relevant break of structure, comes back into the perfect PY of my 1 to 46 trade. You enter this crap here, right? And what do you target? You target, what was my target? I don't recall what was my target. I think it was... Oh, it was this? I don't remember. Like it was that fat. Because my stop loss my entry was lower. Anyways, it doesn't matter. And that trade has been taken just because of the RTP. Okay? This is something you cannot ignore. Every time that you miss an opportunity and that you're like, let's say, the price has left without you, use the reverse trading technique. And not only it will help you with practice, but your brain will actually record these trades to be able to practice them. A lot of people underestimate marking up trades, seeing them play. When I was a beginner, I used to mark up these things like this and see, okay, this played out. This would have given me a 1 to 7. I was constantly marking up trades like this. That way, I was still recording them into my brain database, and it was helping me becoming better. If you see here, again, price reacts to this. There's like, let's say to the left, I don't want to go into too much details because that's more so for the future videos, but let's say price reacts. There's that inducement, price reacts, leaves. If you see that it left like this, it's like this. You're like, fuck, I missed that trade. Reverse trading technique. I would have entered here, my partial would have been here, and my overall TP would have been here. Be honest with yourself. Your greedy ass would want to target the graveyard, literally the daily low. So you put an alert here, okay? And you wait. Every single pullback up until it touches your medium target can be tradable. Coming back, pushing, filling this imbalance, going now into that POI, you lower a time frame. You find an entry. Oh, what do we have here, sir? What do we have here? Don't do like Joe. You fill the whole thing. Ah, nice, right? Ooh, what do we target? Your real idea. The reverse trading actually architected and engineered your real trade. Now you wait. See, you have your minor target here. Let's see. M1. Now you have your M2 and your M3. You play price. Medium target taken. You remove 50% if you want. Take the partials you want. Nobody ever got broke taking partials. I'm telling you, the partials is probably the reasons why I'm able to keep my head out of the water, because I rarely take my TP. I would say maybe in 30% of the cases my TP is hit, but my partials are almost 95% success rate because I monitor the price. If price try correcting, I take partials. Take money home. Play with the house money, the bank, the casino money, call it whatever you want. You will build so much confidence because of that buffer you have that it will make you a better trader because you will be involved in more trades, right? We continue. See, now price is reacting even worse. You secure the profit. You don't care. Do you want to be involved in other trade? Why not? Okay. Price has an inducement low here of this logical structural point. See, now it fills the imbalance. It comes back. It does an internal break of structure. Do we have an entry? Yes. Let's go. Play with the flow, right? Same thing here. You enter here. You target this. Where would be the most logic on M1 here? You go here to this structural point for potential continuation POI here with that imbalance fill, right? The M2 is here and the M3 is here, right? So let's go. But it's very important at this moment when you're here and price does this, you move to break even. When this candle closes above, let's see, it hasn't closed above, so this is here. It's very important. If this candle is closed above, you move to break even. You cannot let the price play without reacting. You wait. Go. Does it close above? No. You move to break even. Wait. Invalidation shield. How is it today? The 25th. Oh, we're good. Now you would have probably be hit to break even because of the spread hours. Yeah, this would have been a head to break even because the spread would have widened, but you get the idea. And look how price dumps perfectly to it. If you would have been taken out of this one, it's okay, but this one would be safe because this is literally like 15 pips. I cannot. It depends on the brokers, but You get the idea, right? The reverse trade actually engineered these trades. I'm telling you, this is a secret sauce, right? Let's do the same thing. You missed this trade here, right? You're here. You're here. You missed this trade, right? Mark up that POI, right? Now you have your RT. Where would be the hard RTP? Your sweaty and greedy boy. So the RTP is here. You do not enter shorts. There's a pullback. See if you can take a buy, right? Pull back. See if you can take a buy, right? You have your structural low reacting to this zone here, that potential SMT, right? SMT, structural low. Do we have like a proper POI that we can enter here? Here we go. Always the same thing. It's rinse and repeat. Always the same thing, right? Always the same thing, always the same thing. Now you take your partial at these equal highs, right? Now price is reacting, break even you. Now you just wait. And price is hit. Just because of this partial zone, you secured your money. That's a 1-2 what? Right? 1-2. 1-2 4. And price just created a pullback because of those equal highs, right? But the overall idea is still the same. And this is the magic of all this, is that we're actually building our idea based on the overall reverse trade technique. This is like magical because see, we still have this POI, this inducement POI, because it induced because they made a new low on that SMT. And you're just trading in line again, right? So it's just always the same thing. A lot of people see it and like they're it seems so complex, but it's always the same thing. So let's see, same thing here. You would miss here, you would target this, right? This is taking. Now you potentially see for continuation depending on the liquidity left here. Imagine you would enter, you want to target this. If you go on M15 for the experts, right? We're trading away from this here. So here, trading away from this. And you want to be involved in buys until here, right? This is a point that led to the new low. It's very, very easy to get lost into intraday plays, but you have no excuses when it comes down to position yourself. Because a lot of people, you guys zoom so much, you're like, or you're zoomed out, you're so lost, you see a POI, you see a reaction, and you think this is ICT bullshit. That's not it. What are the intentions, right? See here, price is trading away from this point, right? We see it. Trade away, trade away, trade away, trade away. Creates these equal highs, yet we have people trying to short, okay? It's okay. It's equal highs. Do whatever you want. But then when they enter here, they try to target what? This thing here or this thing here, right? So you need to understand that you position yourself with the liquidity, but don't enter where the liquidity is engineered. Like if there's equal highs here, don't enter short here, please. Like that's suicide. But do you see how we keep constantly position ourselves with the liquidity? And when you have the reverse technique, you can just actually just play with it, right? Until a position is taken, you don't have to. So see this is a trade I missed. Okay, it was Thanksgiving today. I wanted to trade. I didn't want it to trade, but I almost took it. Like I was at a fraction of taking it. My MT4 wasn't open. I missed it. Okay, But look, that's what I did. Reverse technique right here. Relevant break of structure, mitigation of that inducement POI. Here we closed here, this zone here, reaction coming back. I waited, then there's these equal highs, inducement with speed. Now all this liquidity here is still remaining, right, with these equal lows, trading against the liquidity, the inducement. It comes back perfectly. That was candy, literally. Here we go, perfectly. And I said, okay, I'm gonna let it go like this. Reverse technique until we hit Asia low, right? That is also potentially our inducement POI zone. And look how it's starting to trade away. The reverse technique has been used for this. I received an alert now, and now I'm doing this video, and all I want to do is take a freaking trade. But I'm not going to do it because I'm disciplined on filming content for you guys. I know that this video doesn't seem that fancy, but please give this a try. I'm telling you, it will be so helpful. You will not regret it. You will realize that positioning yourself with the reverse technique will actually help you becoming a patient trader. You are not allowed, this put it in the rule, you're not allowed entering trades until your RTP is hit, right? RTP is here, RTP is here, alert. Now if you want to look for buys, fine. Until it's hit, you have to wait. Go to another pair, right? This is a perfect way to mark up your alerts, okay? And a lot of people say, yeah, but how can we know, how can you know where your RTP is you need to do your due diligence on the chart, like I showed you guys, okay? So I hope you guys enjoyed this video. Give it a try because this will be very helpful when it comes to patience, okay? Hope you guys enjoyed. Have a lovely day. See you guys in Discord. Peace.